All righty. Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm Harvey Freed. Alongside of me, Harry Glanz.
You are Harvey Freed. I am Harry Glanz. And how come my mic wasn't on, you guys? You missed me for the last 3 weeks. Hi, everybody. You missed me for the last 3 weeks.
Well, you're back, and we were happy to have you here.
Back
it's
and
awesome.
better than ever.
Yes, sir. No doubt about that. Look who you bring in, Becky Alley from the office. Hey, Becky.
Present. I'm very happy to be here.
Awesome.
Love it. Always having Becky here, and she brings in Joe Mock. Joe Mock from Keller Williams.
What's
Joe,
happening?
Always great to have you. That Advantage office out in the Novi, Northville area.
2 offices, downtown Northville, of course, and then right there, basically 8 Mile and 275. So 2 great offices, great locations.
Joe, when I was a kid, it was always like jumping the car to head down to, like, if you were going to the Michigan State games or down to Lansing or whatever, you jumped on 696, and it seemed like once you got past, I guess, Milford or something, that was it. It was all, trees and empty lots and such. That's not the case anymore, and right in your backyard, it's nonstop growing. I want to say that it's probably the hottest area in Michigan right now.
It is. Well, at least in southeast Michigan,
Yeah.
South Lyon and actually Macomb Township, they go back and forth with, which one's growing faster. But South Lyon is absolutely booming, and you have 2 different crowds. One that says, the growth is horrible, and the other one that says, I'm moving here for all the growth.
Yeah, but
So,
it's always
that's the way it
like
goes.
that. And by the way, Harvey, how old are you? You hopping on 696? It's all trees? What's he talking about?
Well,
It's all
actually, I was
trees.
surprised. I was surprised 696 existed when he was a kid, to be honest. So
Yeah, right.
There's
All
nothing there.
trees.
Past Milford, there wasn't much. Now it's a ton of
Nah,
development.
man.
It's nonstop.
I'll tell you what, in 2011, a friend of mine moved to South Lyon. He said, you got to move here. I said, no way. It's all country out there. And 2 years later, there I was. And it was a little bit different already, and it continues to be different. And like I said, some people love that. Some people hate that. I continue to believe it's really going to be, like a Novi West or, like Canton. I mean, basically where it's just going to have a couple of big major roads and everything's going to be off of them. And, that there's ups and downs to that, definitely.
Well, it's a pretty area, also,
Yeah.
no doubt about that. But but Becky, no doubt that I'm, Harry wants to pick on me a little bit, but there was Brighton, and we do a lot of business in Brighton.
Yes.
And-
Yes.
That's a long time ago. That's like back in the early 70s, Harvey, to the mid 70s. You weren't even born then. Right? But here, you go to South Lyon, right? There's 2 high schools there. South Lyon East was built about 10 years ago.
Yep.
It's a beautiful facility, beautiful school, South Lyon High. You go out there and, listen, guys, it's not out in the country.
No.
It's part of metropolitan Detroit. It's
Yeah.
a suburb of metropolitan Detroit. People will always live where they want to live, and they'll drive to work. That's how we are around here. That doesn't diminish the growth that's going on in the city of Detroit. People want to live in urban centers, but people also want to have their own land, their own lot. They want to be out there, and you can always drive to where you work. So people are going to live where they live. Like you said, Brighton, Heartland, Howell, Macomb County. I mean,
Right.
you go all the way around. It doesn't matter. Take a look. If you fly over metropolitan Detroit is a very, very large piece of land.
Plus, it's inevitable. I mean, you have, like he was saying, some people like it, some people don't. You're going to move into a location because it's undeveloped and you have that space. You don't have that neighbor. But guess what? It's only a matter of time because we are growing. And pretty soon before you know it, like you said, places like South Lyon that weren't overly developed, it's leaning that way. And then it's either going to drive some people out and it's going to drive other people in because the school districts are great, the homes are beautiful, and it's in a really appreciating market because it's kind of one of the few areas that are untapped right now that are growing, and there's a lot of things happening around that area.
The values in the area have basically doubled in the last 7 years. I mean, that's the bottom line. The median sales price was like $178 in 2013, and it's like $356, $358.
Oh, wow.
Let's just call it $360. Let's round up to $360. I mean, that's almost a complete double of medium priced homes. And the truth of the matter is, unfortunately, you're not really even going to find a lot of homes in that price point right now. Because of course we're factoring in some of the $100,000 and a couple of the million, but for the most part, if you're really going to come out to the area, you're probably going to start around 350.
Okay.
And you're going to go up from there. And that's including existing construction. If you're looking at new construction in the South Lyon area, you're probably going to start closer to 400 and go up from there. I mean, there's a lot of development for sure. And these places are selling out fast. But it's amazing some of the price points that they're selling out at.
So, Joe, we were talking about before the show, we were standing in the hallway, we were talking about one of the questions I like to ask guests when they come on the show is how do they feel the market is trending? I mean, what's the trend for you? You're in the trenches every day. We're on the street every day. We have a pretty good feeling of what the market's going to be. So right now we're sitting here. It's the end of September. We're going into October, and we know that sales through September and the beginning of October are usually pretty strong because people still want to get their kids into that school district that they have them enrolled in. So we talk about it. Tell me, and I'm going to ask you to look in your crystal ball right now in front of everybody, and there's millions
tell us,
of
Miss
people.
Cleo.
There are millions of people. Harvey Fried will tell you this is the number one mortgage show.
That's right.
And there are millions of people listening
Yes,
right now.
at least.
Where do you see this going from today, the 21st of September, through, say, the end of the year?
Yeah, essentially it's going to be like it's been the last few years. Is it slower than summer? Yes, it is slower than summer, but we won't have some hit the brakes. There's no more sales. Everything's going to stop. Essentially you might see a couple more days or a couple more weeks on market. You're going to have to be priced appropriately. If you come on the market and your neighbor's home sold at 300,000 and you want to sell for 305, you might raise some flags. You better come in at 295 or 300 just like the neighbors have done. This isn't the time to try and set a record.
Especially not going into the fall.
That's exactly right.
That's what you're saying.
Yes.
Okay, everybody out there, he said if you're listing in the spring and summer, it's better than listing in the fall and winter. He did say that.
And he's
I
also
did.
saying you need to
He just
listen
did
to
say
your,
that.
your professional Joe Muck when he's telling you how to list your house to sell.
But
Right.
the big thing is there are buyers out there. The buyers didn't go away. Everybody believes, well, the school season started, the buyers went away. There were a couple packed up and they said, well, we'll be back in spring. But the other, 52 of them or whatever number it was are still there and still looking. They're still losing houses. They're still overlooking houses. They are still there. The market is still good. We like to think that because a house doesn't sell in 24 or 48 hours that the market's collapsing. The reality is, as long as we're selling them in, 3 months or less, we're in a hot market.
Yeah, it's great stuff. Pay attention to the feedback you're getting too on your listings and stuff from people coming through the house. Hey, want to throw out some information out there. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289. We are broadcasting live here in the studio, of course, always at 97.1. You can reach us at 248-539-9797. We take all your calls. Always great to have Joe Muck in. Straightforward, clean, concise, great real estate agent. A lot of great agents out there, but you got to find those great agents out there. They've got the additional information that'll help you get the house sold. Joe, a couple things going on. Existing home sales have actually been up year over year. Over the last 2 months, July and August, the numbers came in and they were great. Second month in a row where the numbers came in better than previously, because there's no doubt the world records were set in 2015, 16, 17. So it's hard to keep up with those numbers, but a little drop in interest rate might have sparked a little bit of interest and got some people off the shelf. Now, actually the numbers is suggested, and I mentioned on an article last week, that it really is not the case. If you're out there looking for a house in June or July, whether the rate dropped a little or went up a little bit, it's not going to prevent you from moving forward.
Yeah, that's exactly right. I mean, the rate drop is always a benefit, but it's not the be all end all. If you're looking for a house, you're looking for a house.
Right.
Unless the rates go to 6% from, 3 point whatever percent, then that's a difference. But going from a 3.875 to a 3.625 or from a whatever the numbers are, these things are helpful and they're nice, and it's nice to save a little bit of money or
They
it
sound
stinks.
good.
Yeah, but well, you guys know
right.
that's not the question you ask. What's the rate you're looking for?
Oh,
You-
God, Joe, I love this guy.
Yeah,
I
yeah.
do
We're not
love this
rate
guy.
shopping.
You must have been in my show prep.
Yeah.
Because right now, you must have been in my show prep because right
That's the
now,
first thing we hear.
everybody that's all here, I'm going to say this to you, and I was going to go on a nice long lecture this morning because I've been back. I'm all jacked up. I haven't been here in 3 weeks.
Okay.
Still, human behavior, the first thing people ask you is, what are the rates? We have to know. There are 4 or 5 things we need to know before the rates. We have to run your credit. We have to see a credit score. We have to know how much money you're putting down because there's a loan-to-value issue. Yes, people out there, that dictates what your rate can be. Number 3 is, how long are you going to be in the house so we can put you in the right program for you? All right? Number 4, how long have you been on your job? Mm-hmm. And number 5, do you make enough money to support this habit called buying a house that you're going to get into? So those are the 5 things. If you just call a place and you ask what's your rate, and they start firing off rates and they don't ask you questions, it's like going to the doctor and you feel sick and you walk and say, give me some pills, I feel sick. You sit down with the doctor says, so how long have you been feeling sick? What are your symptoms? What do you got? Are you allergic to anything? They don't just prescribe stuff for you. But that's what's happening now because rates are down and everybody wants to know, what's my rate? What's my rate? Well, guess what? If you don't have a high enough credit score and you don't have enough equity in the home and you don't have enough time on the job, these are all things that can affect your first question. What's your rate?
Right. And that's,
So-
there's also a lot of misinformation out there as well. So,
Yeah.
for example, we'll get your typical first-time home buyer. They don't know any better. What's your rate? What's your rate? What's your rate?
We
Right?
got to
Well, when
stop
they're-
with the what's your
Yes.
rate.
So when they're talking to someone like me or you or Harvey, we're going to literally break it down. Okay, ask those questions. How much money do you feel comfortable putting down? 3%.
Right.
Okay. Now your payment, let's just say your taxes are going to be X. Your insurance is going to be this. You don't have an option not to put taxes and insurance into your payment when you're only putting 3% down. So this would be your
Right.
projected total payment.
And by the way, Beck, we work hard. I mean, we work hard at getting the information,
Yeah.
researching the information, doing our homework, giving the proper answers. And guess what? Sometimes it takes a little bit more time because, Harvey, as you know, we all do, credit might not be that great.
Yeah,
People
things happen.
either think, here, it goes like this. People really don't know what their real credit is. They either think their credit is way worse than it is or way better than it is.
Yeah.
All right? There you go. What a great segue.
That's a great segue. All right, closing loans in today's climate. We got a lot to share with you. 248-539-9797. We come back. All your calls. Alrighty, welcome back to the show. 9:16. The sun is shining. Gorgeous day outside. September 14, 2019. You got it on the Hardcore Mortgage Real Estate Show just till 10 o'clock. And, of course, we'll have sports here all day. Pat Caputo and the whole staff coming in to rock and roll and talk about sports here. We got so much going on, a lot of football. And, of course, the Lions will be trying to tackle on San Diego tomorrow. So, boy, that's going to get interesting again on Monday, as we said last Saturday.
Right.
Hey, let's go off to a call here at 248-539-9797. If you want to join the show, we've got Mark calling in from Troy. Good morning, Mark. Welcome to the show.
Hi, thank you.
Thank you. Go ahead with your question. Yeah.
I had a question. I paid off my mortgage in full last week.
Congratulations.
And thank you. I was wondering what I should expect and whether it's my responsibility to have a lien taken off of the title or will I get the original documentation? I just really don't know what to expect. I got a congratulations letter from my mortgage company, but it's very vague as to anything I need to be doing.
Well, yeah, I want to get a copy of that discharge of mortgage. So, I mean, the congratulations letter is great for starters.
Right.
But, yeah, definitely, at least, what do you think, a couple weeks, or he should have to follow up on the
Troy,
discharge?
I would say, yeah, I would give it a few weeks, even up to a month. They're going to record a discharge of mortgage, and you should be getting that in the mail, and that discharges the lien. And I don't know how every municipality is a little different. So I would give them about a month, and if not, then I would call them and say I never got a copy of it and make sure that you
hang on
get
to
it.
those papers.
Yes.
Yeah, hang
Once
on
you
to
get them, save them, put them in a safe place because sometimes they get misplaced or people pull credit and they'll still see an open lien that hasn't been closed. With that document, once you receive it, you'll be able to prove that that's been closed.
Yeah, that's a
and
good one to keep.
discharged.
Hey, Mark, one of the other things that sort of just came into my mind was, did you have an escrow account? Were you paying taxes and insurance in your
No.
payment, or were you on your own?
No, I had an escrow account.
Yeah, so that's another thing about it is I wonder, at least they must refund the escrow account,
Correct.
won't they? Yeah, if
Within
you no
30
longer-
days after the payoff.
Okay, so that's key, Mark, because, yeah, that escrow account that you have, they probably just paid your summer taxes, so you want to double check on that, and then make sure you find out and get back what is the remaining amount in your escrow account, and then get ready for December 1st's tax bill because you're going to be paying those taxes on your own.
Right, something that they've been handling for me for 14 years, and
Right.
now it's my responsibility.
Well, congrats. Now you got all this extra money and the cash flow is good, so just hang in there, sock it away for retirement, and you're going to be all set. It sounds like you're on the path to righteousness.
Thank you very much.
And
Thanks
Mark,
for the
wait
call.
a minute. If I had a bell, I would ring it. So congratulations.
We'll ring
I
the
was
bell.
going to say buy a second home in I don't know, where do you like to go? Traverse City?
Yeah, that's not bad
Yeah.
idea.
Go buy a house on a lake. I'm
Well,
just
we're
there,
mortgage
little
people.
cabin.
We
We're
always
mortgage
want you in
people,
debt.
that's right. Yes, not.
Yeah, and I'm a salesperson. I always want to sell you something. So
Well, good stuff. It's great when you get those calls every now and then. Again, but if you heard a little bit in there, he just started 14 years ago. He got himself a 15-year
ding.
mortgage. Right now, if you're paying on a 30-year mortgage, look, I had to do it. I had some expensive houses over the years, but if you could do the math, interest rates, of course, have dropped down. Recently, we're going to get into the interest rate conversation because things are going haywire here. But yeah, what a great opportunity if
Yeah.
you can get into a 15-year mortgage before you know it. That house is free and clear. Well, the train's been rolling, Leash. You know about it.
Yeah.
It's all the headlines are that the mortgage rates are down. We've been talking about it
Yeah.
for 8 weeks. Welcome back to the show, 9:15. If you're just joining us, the Hardcore Mortgage Real Estate Business Show. Yeah, the show that gives you the answers on buying a house, refinancing your house, and a whole lot more. Give us a call, 248-539-9797. I'm Harvey Freed. He's Harry Glanz. Becky Alley.
Present.
Top 1% of all originators, Becky. That means something. You're
In
right
the
here.
country. In the country.
You.
And of course, none other than the great Joe Muck from Keller Williams out in the Novi Northville area. Joe, always great to have you here because it's just nonstop with the information. We got some calls already coming in. And if you'd like to join the show, 248-539-9797. Let's go to those calls. I got Steve first. Good morning, Steve. Welcome to our show.
Good morning. How you guys doing?
Real good.
Morning.
Go ahead with your call.
Hey, just calling regarding a new construction build. So I have some land, have my plans, have the builder picked out. In the process of now of digging into a loan to own a home,
Yeah.
paid for, so it's owned outright. Very little credit. Any credit that I have is paid off monthly, and I just have a loan for a car with about $1,500 left in payment. So I'm just wondering approach or what type of process is to get a loan.
Do you own the land free and clear that you want to build
Yes.
on?
Yeah,
You own that.
yeah,
So
the
you
land
bought that
is
outright. That's all free and clear.
Yes.
Now, with
Yep.
regard to the plans and specs, and you picked out your builder, did they price it out and did they go ahead and calculate what it's going to cost you?
Yeah, they've got that all itemized out from pretty much everything is all
Okay,
itemized out.
and you're going to be responsible for financing the whole project. The builder's just going to build it. You're going to buy all the materials, what they're going to tell you from the materials list, and then you're going to have to pay for everything on the spot, correct?
Correct. I'm paying the builder a percentage of the build, and he's overseeing the project.
Good.
Right.
Yeah, well, you need a construction loan. There's no doubt about that. You're ready to decide which lender you want to move forward with and sit down and look at terms. Most of the construction loans that are out there now will allow you to go ahead and roll that construction loan into an end loan product. I guess the two things that I would be concerned, I've built a couple homes, so a couple things that I would be concerned about is really just that you're working with someone you extremely trust, and make sure you have the conversation about when he's purchasing the lumber, when he's working with the lumber yards and all the materials, that you have some oversight on that. It's the only thing that I ran into that got a little funky in the transaction was my builder too was an independent builder, the last house I built, and he was building 4 homes at the time. So it was a little hard to distinguish between which materials were going into my house and which were going into some of the other homes. So at the end of the day, it got a little, I saw some interesting numbers that, looked like I might have lost some money on it. And again, at the end of the day, it all worked out just fine and dandy, but you're ready for that. Go ahead and sit down with the lender, bring your builder in. Of course, as long as the builder's approved and licensed and insured, most of the lenders will go ahead and go and grant you the loan and start the project.
Okay, it's pretty easy. I mean, from any particular bank or anything.
Yeah,
Yeah,
absolutely.
we'll call you about that. We'll call you off the air about that. But let me ask you this question: when are you getting ready to start this project?
Well, the specs of the home or the blueprints of just are going to be submitted to the city. So it's, we're looking at probably about 6 weeks. I'd like to start.
Good. Yeah, if you could break ground before winter kicks in, that'd be good.
Yeah.
Get that foundation poured maybe, November, and then you can start framing it up and stuff, and
That's
probably get it all,
exactly.
maybe even enclose it before the end of, when the winter kicks in.
All right, so
Yeah.
we'll go ahead and we'll give you a call off the air, and we'll go through the whole thing with you, and we'll talk about it, and then we'll make our recommendations.
Hey, Steve, where are you building at? Where are you building?
Richmond, Seminole Lake.
Yeah, fantastic. Congratulations. Yeah, we'll give you a call off the air and see if we can point you in the right direction. Really good stuff. I'm excited for you. Good.
Thank you very much.
All right, really
Have a
fun.
good day, guys.
I've been fortunate enough to actually build a couple homes, and yeah, it's great. I mean, new construction's awesome. Joe, we were talking about your area. Of course, there's a lot of it going out there. A little bit different when you're working with the builder versus your own project.
Very different, and it's very important to look at everything that you're doing. When you're working with a builder, understand that there are things that happen in a house, like connecting gas lines, connecting sewer lines, things like that. Where is that cost coming from, or where is it being built into your price? A lot of the big builders, normally they've factored it in, but some of the other builders, and maybe not every single big builder or definition of what a big builder is. So it's real important that you look at your purchase agreement, because that could be a $20,000, $30,000 line item, and it could be a cost at close. It could be an assessment. And, a lot of times people will say, well, why would I work with a realtor when I'm just looking for new construction? Because truth is, we can't really negotiate that contract a whole lot, at least not right now. Maybe if in a down market you can.
You can definitely read it.
But you can read it?
You can read it.
And
I'm
you
like
can-
talking to 9 out of 10 families lately that don't appear that they've actually read their purchase agreement.
Right. And I know what I'm reading now. I'm not a lawyer, so I can't give you legal advice, but I can say, hey, if this was a normal transaction, existing construction, if this was my purchase agreement, I wouldn't have this language in here.
Okay.
And let you know what you're getting into. So that way you can, have an idea. The other thing that we do a lot of times in new construction is really help you understand, remind you, yes, I know you don't think you want a deep poured basement. We can't change your basement later.
Yeah.
So just really make sure you don't want that deep poured basement over that, sink or something like that you are deciding to do right now. Help you work on those things because everybody's worried about resale value, even if they plan on being in the home for 30 years. Well, these are the types of things that impact resale value.
No doubt, Joe, having professional people talk about, and all of a sudden now the conversation leads to daylight windows and egress windows, and now you got some square footage that you really could use versus maybe going on another route. So having professionals involved that have gone through it a few times or a few thousand times, that's going to help you. 248-539-9797. We take all your calls. You guys want to jump in? I got so much to do.
But just to say, like what you guys are saying is important. There's so many consumers and buyers, whether you've done it one time or 0 times, that you still don't know all the ins and outs of purchase agreements and transactions. So that's why it is always important. We can't trust enough to work with professionals. Seek us out because we've been through it a time or two, 10 times or two, right? And someone like Joe, like Harvey, he's built houses. He knows what to look for, what not to look for, and you're just really just speaking from experience. And you can't put a price on that.
And every
you can't put a price
transaction
on
is
experience.
different.
Correct.
Right? Every transaction is different, and you've got to look at it, and you have to look at it in the singular situation.
If I was driving right now, I'd probably call in and I'd say, hey, when I build new with the Pulte, with the Lombardo, with the Toll Brothers, with the whoever, do I need a new construction loan? Because that's a question that they always ask
and the
me.
answer is always no, usually with them, right? That answer is usually no because, of course, the bigger builders will finance the project and they'll see at the closing table. But again, Joe, it's a great point you bring up because, you need some money along the way. You sit down and meet that sales professional and discuss it with as many people, and then you understand they need $10,000 at the time you sign the purchase agreement, $10,000 after the rough, and understand, do you have the money to make that work? Joe, you brought up something. I wasn't going to go there, but if you're working with the builder's lender, oh boy, that's a real sticky thing. And again, I don't want to dive in too deep, and I just want to say this.
Here, let's go there. I'll be the bad guy here. I want to be the bad guy.
I'm
Yeah, I'll be
always
the bad guy.
Let me
Let me be the bad guy. I'll be the bad guy because I want. No. You guys are always the good guys. I'm always the bad guy. So it works like this. A builder like that, the ones that you mentioned, I'm not going to mention them again, they will have their own lender. And they will go ahead and they will try to go ahead and hold the buyer hostage to use the lender by offering what they call builder's credits. Now, the builder's credits will go against any of the lending opportunities that they're going to give, and they'll say, we'll give you a $5,000 credit toward your closing
Yeah,
costs.
that's the magic number. $5,000.
5, right? So what happens is they end up building it in to the cost and to the rate, and then saying they're going to give it back to you. So it's like putting a sweater on sale. It's a $100 sweater, but you're going to put it on sale for $175, and then when somebody buys, you're going to give them $75 back. All right, this is what happens. But then they'll also threaten you that if you don't use them, that, they're not going to be able to do this or this or this, or the price is going to go up. And you know what? You don't want to do that. It's just a way for them to go ahead and add on to the sale and make more money. Now, ready? We live in a capitalist society. Is there anything wrong with that? No, there is absolutely nothing wrong with it. But don't fall for it. Just recognize what it is and still shop it. We have plenty of people that build houses with these big builders, and we do all the loans. So it's okay, and everybody else does it too. Every lender does other builders' loans. Now, the problem is that are the builders' lenders proficient enough to go ahead and dissect your particular situation? That's pretty tough, isn't it?
No, it's good stuff.
There you go.
Hey, understand.
I'm the bad guy, Harvey.
Understand you have rights out there.
To be the bad guy.
How about if we just tell people, look, you have rights out there. You can use any lender you want. You can use any title company you want. Typically, that one you might want to check out a little bit. But you have some rights, and there's some things that you can shop out to protect your interest in the family. Having more knowledge is going to set you up for success. Let's move on to some calls. 248-539-9797. Jim from Berkeley. Good morning. Welcome to our show.
Hi. I have a question about my son lives out in Grand Rapids. They're in the process of buying a house.
Yeah.
And they need a little help with the down payment. So I was going to give them a they need a couple $1,000, give or take.
Sure.
And I was wondering what the best way to go about that was, so that their mortgage lender, somebody doesn't say, aha, where did this money come from?
Well, yeah. We deal with that every day. It's a great question, Jim, and I'm glad you're ahead of that. Becky, I'll let you go ahead.
Yeah, so when you're, if they're asking you to give money towards their purchase, you can absolutely do that. But one thing that we cannot stress enough is cash is not king in the mortgage world, okay? Everything has to be documented. So what you said is when you pull out that $10,000 from the mattress or the safe or whatever it is, and you're like, here's this $10,000, you can't do it like that. It has to be in the bank. It has to be source fund. So the best way would be for you to write a personal check, have your son deposit that check, because they're also going to have to verify the money coming out of your account as well as it being in their account.
So a gift letter is also filled out along with showing that you've had this fund seasoned. It comes out of your account. You write a personal check. We show that there's a canceled check after the money's deposited into your son's account. Yes, you can give up to, and it's even more than this. It used to be like $13,000, so you could give $13,000 to him and $13,000 to his wife. But check that out with your CPA. But the key is just a gift letter, a simple gift letter, understanding that there's no repayment. And more importantly, that you paper trail this properly. We would love to be his lender. We do lots of business in the Grand Rapids area, so maybe we'll follow up with you after the show and see if we could maybe show you guys an easier way.
Jim, how long have you lived in Berkeley?
About 7 years now.
And it's exploding, isn't it?
Yeah, it's ridiculous. I had the house. I bought the house for $120, and I had to refinance last year to pull some equity out. And they asked me what I thought it was worth, and I said, well, maybe 180 or 190.
Yeah,
the house is assessed at 2.25.
Yeah.
And they said the same house in Royal Oak would be 3.25.
There you go.
Yeah, that's what's going on there. And
Something pretty cool
Berkeley's
about
hot right now.
Something's pretty cool about real estate.
Yeah, it's a booming market.
All right, good stuff, Jim. Good call. We'll follow up with you and see if we can help your son out. Appreciate the call.
Okay.
248-539-9797. Jim just said it, man. There's some equity out there. That's right. Equity has reached all-time high, $428 billion from last year in equity. Some of you folks are going to tap into that equity. When we come back, we'll talk a little refinance and cash out refinances. Keep it here. All righty, welcome back to the show, 9:30. All right, little Uncle Ted there to keep things rolling here. It's the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. Give us a call here live in the studio, 248-539-9797. Always at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. You can watch us on Facebook Live, like our show. We appreciate it. You can send some questions there. We usually get back with you throughout the day or through the week.
Yep.
And today we brought in Kathy March, of course, from great office there, Realty Executives hometown in Shelby Township. And I had some
It's a beautiful brand new office.
It is gorgeous.
What are you
They
Crossroads?
just
Where
built
is
it.
it?
It's
22 in Hayes.
22 in Hayes.
Oh,
Yeah.
okay, that's out in your neck of the woods. Like you said, Lisa, right across the street from where you live.
You can come to my house
can
after.
I can walk over for lunch.
That's right.
Yeah,
No,
McCombs.
better yet, dinner and a glass of wine.
That sounds good. McComb's been jumping forever. Just
It is.
continuously grows. You know, even when I thought 22 Mile was
Construction.
north, you better head up to 28 and 20,
Yeah.
26 and north of
Yes.
that because
Yes.
they're building all the way New Haven, all the way up and through the next county. So
Yes,
just north
love
of you.
it.
So a lot of new construction going on. Definitely could get in touch with professional real estate agents who know the area very well. And
Yeah.
Kathy would be a good start. Again, you can call Capital Mortgage Funding. We'll set you up with that strong approval letter. And that's the key, Lisa, as we talk about
Yes.
pre-approval letters. You talk about these home buying seminars. It's got
Yes.
great opportunities for families or individuals to sit down with qualified loan officers. And it's a Q&A. It's back and forth. And you're building your knowledge bank and you're sponging in all this great information. It's going to give you the confidence. That knowledge gives you that confidence to move forward. And the clients that don't meet with us, this is proven fact. I just had one again. I couldn't get the guy to meet with me, this and that. The deals get sloppy, especially if they don't have their ducks in a row.
Yeah, absolutely. You know, they say knowledge is power, and there's a reason they say that. And I think when we take the time, this is usually the largest purchase for most people that they're ever going to make in their lifetime, and to spend half hour, an hour at least, understanding what would be expected of them and what we're going to offer. And so we have a good understanding. So we know that we're putting you in the best available mortgages for your specific situation or position. Without those conversations and taking the time to do that research, you might not end up in the best mortgage product because you haven't taken the time to explain to us what you're looking for. And we want to, ask all those questions. It's so important, to have a smooth transaction, and it all starts up in advance by getting all that information and documentation.
Right. A lot of times, even getting the funds together. So we always talk about credit. You might want to get your ducks in a row on your credit. Just improving your credit score, 20 or 30 points, might get you that sweeter interest rate. And then, of course, always the funds to close. What are you going to jump in with on that?
Well, I was going to say absolutely. We have to position you in the best light that you can be in.
Right. I always say, let's take the opportunity to maximize your credit score. Like when we first pull credit, right, we always tell people, they're like, well, what do I am approved for? I'm like, this is what it is now. But you don't have a house. You don't have an under contract at this exact moment. So while we're looking for a house, why don't we take the opportunity to maximize your position? Sometimes it's not even spending money or paying down debt. Sometimes it's redistributing your debt. I've had it where we can bump people 20-some points by redistributing debt over the debt that they already have. So we're not increasing it and we're not paying it down because sometimes they don't have extra funds to pay down with their down payment. You know what I mean? So there's so many things that we can do. But again, knowledge is power, and speaking to a qualified loan officer.
It's night and day.
Right. Well, people say, well,
I called
XYZ
somebody and I'm
company,
shopping
they
interest
didn't-
rate. How about if we say this, Lise?
Oh.
When you're asking, if you're a consumer out there and you can only ask your mortgage person what the interest rate is, then you don't have the knowledge.
Then there's not enough knowledge there.
Right. If you're only asking what the interest rate is, you're in a dead end street. And if they can't give you any more information, it's probably the wrong person. Hey, let's move off All right, welcome back to the show, 9:34. If you're just joining us, that's 1 hour of football therapy, the Hardcore Mortgage Real Estate Business Show. That's right. Take your mind off of football just for a little bit. We got Michigan football, we got Michigan State football, and the Lions tomorrow. So it's going to be really pleasant around here on Monday, Harry, or maybe not. So hopefully we get 3 W's out of it. But again, 1 hour of the
They're going
mortgage
to the
show.
Super Bowl.
Yeah, they're going all the way. But
Hey, the Lions are undefeated.
Joe, we got Pat Caputo coming up with sports right at 10 o'clock and a whole bunch of sports all day long here. Hey, we dove into a little bit of what's going out there. Also, the show 63% of the properties out there have mortgages. Joe, we talked a lot about this equity. I mean, it's crazy, $428 billion, the most amount of equity in the United States right now for homeowners. Home ownership's great. We already know about all that. What else is going out there? Borrowers have all this equity. You got to do the right thing with it. But also, Joe, you talk about new constructions. How about people overspending? We talked about, is there a boom going on? Don't over-improve for your neighborhood. Comment on a few of these things.
Yeah, well, and it's interesting. The overspending has not been as drastic as it has been. So when we talk about a market slowdown, sometimes these are the types of things that we really mean. That instead of putting $10,000 over on a $150,000 house, we're putting $2,500 over on a $150,000 house or $450,000 house. I mean, I just saw one recently across the street from me that sold, and it sold in 7 days, multiple offers, but for $2,000 over ask, and it was in the mid 400s. So those are numbers that are still happening, but not as drastic, right? And that means that it's just a slightly different market, but it's still a hot market. And everybody asks, well, aren't we going to collapse? So it's going to collapse. It's going to collapse. 2008 is going to happen again. And you're talking about it with the billions of dollars more in equity. We're not in the same market that we were in. How many interest-only ARM loans are you guys doing right now?
Yeah.
How many negative
be
amortization loans are you guys
First
doing
of all,
right now?
We never did them. I have to set the record straight on that again. I'll be the bad guy. Never did subprime loans.
I think that makes you the good guy.
Never did negative AM. But no, there are people who are going to call in and they're going to write and they're going to, hey, Harry, you liar, whatever. Wrong. Never did neg AM. Never did subprime loans.
Yeah, but the point is that people were doing them, right?
Mm-hmm.
And that stuff's not out there, not much. Like we said in the break, we have predictable mortgages right now, and that makes the market a good market. And so when we look at what people are doing when they're buying and appraisal waivers and things like that, it's still happening because we know that in a good market we're going to see appreciation. So if you go a little bit over today, next year, maybe even sooner, it's going to catch right up. And as long as you plan on being in the home for 3 or more years, it's not going to be a big deal.
So, Joe, here's the deal. If you borrow in the 4s, okay, let's just round it to 4%. After tax, you're in the high 2s. All right. Why are you going to fool around with any other product? And people are going to say, but what if I'm only in the home for a year and a half? It's still a fixed rate market. I don't care. Yeah. It's overwhelmingly a fixed rate market. Please don't try to outsmart the market or yourself. Stay with a fixed rate product, whether it's a 30, 25, 20, 15, or 10. Go with a fixed rate loan. Lock it in. Lay your head down on your pillow at night and rest assured that your payment's going to be the same, principal and interest. Now, taxes and insurance will go up, but they always do, right?
Yep.
But your principal and interest will never change. Why would you want to fool around with it, specifically if you can borrow after tax in the high 2s? Think about it.
The rates are, even the fixed rates, though, they're so competitive. We're not in a market where you want to seek out an ARM. It's It's not advantageous. It doesn't make any sense.
The
long-term,
difference, the
short-term,
spread between an ARM and a fix is not there.
Yeah, it's not. It's not worth it at all. Thank you.
A lot of families, it's funny because...
Brought to you by Becky Alley. That was a paid message by Becky Alley.
Hey, Beck, the truth is, if a lot of these families back when the housing debacle collapsed on them, if a lot of them just hung on to their homes, they would have been in great shape. They couldn't hang on to them because they had these funky adjustables that were going up to 12 and 15%, so they couldn't rent them out.
Right.
But now, like you said, it's a healthier market. Generally, the folks are getting fixed rates, so if they do decide, whatever, divorce, death, they can't keep that house, they might be able to rent it out. They don't have to worry about that rate going through the roof.
Yes, you're setting yourself up for success.
So guess what? I'm on the plane last week flying home.
Okay.
And I put on the movie The Big Short.
Oh boy, again.
And then I got spooked again. I did. I got spooked again because just what you're talking about, people were borrowing 80-20. Okay, on an adjustable rate. They were being sold that the market always appreciates and then they can refinance and we'll take the rate down and so on and so forth. and then the housing market collapsed and it didn't happen. So all of a sudden I was having bad dreams and nightmares again because I watched this movie. So, but it all goes back. What does that have to do with anything, Harry? You're saying, because Harry's like, Harry, why are you talking about that right now?
I like it.
Because it goes like this. It goes back to the fundamentals of borrowing and lending. Okay, if the situation right now is a fixed rate market, borrow money and lock in a fixed rate loan. Okay, that's it. Don't do anything crazy. There's no psychedelic, magic, happy arm out there anymore. Please do yourself a favor and look at a fixed rate and lay your head down on your pillow at night and say, hey, that's my payment forever. I'm good with it.
Yeah, and like Joe mentioned earlier, when there's a slight adjustment in rate. So you have 3.875 versus 3.625. The difference is so minute versus that peace of mind that if something were to happen, let's say, you still have a secured payment that you know you can handle, you know you can afford. If you're in a situation where you can't sell your home, like Harvey said, you can rent the home out. You can retain it. You can even keep it in your portfolio because if the stock market isn't changing, you now have rental income coming in. It's setting yourself up where you don't have to worry about you're controlling what you can control.
There you go.
Your payments.
There you go. 248-539-9797. We talk about educating yourself on the entire process, mortgages, closing costs, escrows, inspection values, budgeting, cost of maintenance. I can keep going. Costly bad advice, Joe. Boy, a lot of people give you costly bad advice, so definitely want to stay away from that. But just generally when you're making offers, having that knowledge behind you. Joe, give me a little feel of what's going on there right now. I know you're working with a couple buyers. Sort of tell me what you're feeling with them. If you could say something without them listening, if you could really get into their head and say, no, stop that. Don't go that route. Go this route.
Yeah, I think the big thing right now is wanting to find a perfect home. Seeing on an inspection report that there's a crack in the driveway that we saw when we pulled up, that we saw when we made the offer, that we saw when we pulled up again, and now suddenly it's a big issue. And it's because we want the perfect home.
Right.
And it doesn't matter what we're paying for the home. We feel like we're paying our money. It's our hard-earned money, and we want to have the perfect home. But the fact of the matter is you're buying an existing construction home. The home is a year old, 10 years old, 100 years old, whatever it is. It's not brand new. And even if it is brand new, you know what happens a lot with brand new homes?
Yeah, they settle.
They settle, and then they crack, and then they get repaired for free. And then you live the rest of your life happily ever after, normally. I'm sure somebody could call in with a horror story. But for the most part, this is the norm. And that's what we're seeing.
Stick with that needs list. Don't let the little things sort of beat up you, beat you up a little bit. All right, 9:42. If you're just joining us, we're going to take all your calls. We got a lot more to share with you. 248-539-9797. All righty, welcome back to the show, 9:45. Man, we get some interesting calls here. So I kick it up a little bit. It's mortgages and real estate. 248-539-9797, the Hardcore Mortgage Show. Again, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. Call the experts at Capital, and we got tons of staff all weekend long. Get that strong approval letter. Get the knowledge you need. Kathy, you're hearing it here live on the show.
Yeah.
I mean, that was an interesting call. We in the industry, lenders and real estate agents, we jump up for joy when the appraisal matches the purchase agreement.
We love it.
That's great. So this one's a little interesting. Again, we talked about maybe a bad strategy. We'll talk off the air with that one and maybe circle back. Let's go out to Scott. Scott, thank you for your patience hanging in there. You're selling a house and you have an appraisal question. Go ahead.
Yes, sir. We got full asking price.
Congratulations.
Later, there was thank you. Well, show me the money first.
Yeah.
The people ask, is your house sold? I go, well, no, it isn't. But till you close. But the appraiser came out 2 weeks ago. My agent inquired as to what the numbers were, and he said, well, I don't do numbers. I give all that to the lender.
Absolutely.
And we haven't heard anything for another week. So
that's odd.
I'm being kind of, something just doesn't sit right.
Where are you? Scott, where's the house?
Mount Clemens.
Oh,
well,
I just listed a house in Mount Clemens.
We'll all agree, us three sitting here agree that no more in today's market. It's been a little busier over the last couple of weeks, so we'll give them a little leeway. But from the time they were at your house, I don't know, 10 days to no more than 14 days. How long's it been?
Usually it's a
I'm
week to
saying
10
a week.
days.
Yeah, even in busy times.
It was 2 weeks yesterday.
So
And you don't get a copy as the seller, right? You won't get a copy of the appraisal, but they should be able to tell you the appraisal came in at value and no repairs were needed, so you're good
Via
to
your
go.
agent.
Via your agent, right?
Yeah.
So your agent should be communicating with the buyer's agent and should be able to pass that information on to you. You're not entitled to a
He has been, and I think the stumbling block may be the buyer's agent, and I can't change that.
Okay.
There's been some other things that I don't need to get into.
Right.
That makes sense. That makes sense.
I'm getting a little jittery. You know?
Well, sit tight. How much you selling the house for, Scott?
It was listed for $232,900.
And it's your primary residence?
Yes,
And you're going to be moving else to another property? Where are you going?
South Carolina.
Oh, okay.
Oh,
Congratulations.
sweet.
Hey, look, I definitely want to stay on top of it with you, and I will if you left your number. It's a little strange. If the market is 239 in your neighborhood, are you in a subdivision or an area where other homes similar to yours are? Welcome back to the show. 946 if you're just joining us. Little cider mill talk behind here. That's right. Gorgeous outside today. Going up in the mid-80s. Sunny. Enjoy the day. Be safe. We got a lot to share with you still. 248-539-9797. We got Joe Muck in from Keller Williams Advantage office out in the Novi, Northville area. And
He's a rock star.
he's totally great. And Joe, you relax me, which is even more fun here. A little bit to share with you about some programs. I'm going to go to this call because I think we'll talk about our mortgage programs that are out there. Eric, you're calling in. You got a question about some zero down programs. Tell me more.
Yes. My wife and I have been looking for a home, and we found a couple that we are interested in. But our bank account says we're not able to get them. So I wanted to know, was there any programs out there that had zero down?
Well, there's the VA loan out there that's a zero down program. And then we can talk all about some different programs like the MSHDA program where the state will give you up to $7,500 towards your down payment. So if you're working with just a couple $1,000s, usually you could become a homeowner. I don't know enough about your situation quite yet, but I think the key would be to sit down with a mortgage professional and get that approval letter in hand. But not only just a piece of paper, it's really a little bit more than that. It's get the knowledge behind you, understand the fund you're going to be working with, how much you qualify for, and then we can really move you forward.
Also, Eric, are you paying rent now?
No, we are homeowners. What we're looking to do is our daughter is having a baby also, and she's never bought a home before. So what I would like to do is purchase another home for ourselves and let her rent out our home.
All right, so she's gonna rent your home from you. In other words, going to make the payment on your home. You're still obligated to make that payment, right? So she's going to pay you.
There is no payment on our home.
Oh, so it's free and clear. Okay, good.
Yes.
Okay, you can do all that. I mean, she's responsible. Of course, you'll be responsible for the tax and the insurance. But yeah, you're going to basically, whether it be your daughter you want to rent it out to, you're going to be a landlord. So she can move on in there. But yeah, before we even go that road, definitely let's find out how much you qualify for. And once you have that approval in hand, Eric, it'll give you the more confidence to move forward. We'll get you set up with a real estate agent. We'll see what your price range is, and of course, then you could go see what inventory is out there and decide if this is something you want to pursue. But yes, the question generally is, can somebody buy a house, Becky, with little money down? And the answer is yes. There's lots of these programs out there where you may qualify. You might not. Look, if you don't qualify, you need to know right away before you start.
That's why I don't want to put the cart before the horse. But
fair enough.
Somebody, if not us, has to sit down with Eric and go over his whole situation and say, hey, listen, can you afford to do this?
Right.
Yeah.
All right, so
you got to come up with a game plan,
Right.
know where you're at, and start sooner, not later.
Yeah, it's always fun when you have that knowledge behind you. Hey, Tony out there in Livonia, you're calling in. Tony, you got a question about, hey, your daughter's buying a home too. What's going on?
Good morning. Yes, she will be getting married next October.
Oh, congrats.
And prior to that, thank you.
Nice.
Prior to that, they are looking to purchase a home. They are currently renters.
Yeah.
And they really don't have any knowledge, and it's been 20 years since I purchased a home, so everything has changed.
Yeah.
They have a friend who worked for quite some time for a major Detroit mortgage company.
Okay.
And I just don't want them to get the wrong type of advice.
Yes.
What is the best direction for a first-time home buyer with minimal down, because they're going to be spending a bunch of money on this wedding?
Yep.
Right.
Yeah.
And the first step is for them to give us a call, because they need to know a lot of ins and outs. It can be overwhelming. What is their comfort level for a payment? Obviously, they want to be married to each other, not their home. So it's important for them to kind of set a proper price point that is going to allow them to live their lives comfortably and still do everything that they want to do in a new home. And whether it's going to be a starter home or their forever home, the point is that have the conversations now. So it seems like we have this coming October or the following October they're getting married.
Following next year.
Okay, so we have some time. So I would definitely suggest we reach out. We're going to reach out to you after the show. And the point is education is everything. And like you mentioned, they have a friend that's in a part of a mortgage company that's one of the bigger ones that everyone talks about. That's fine.
Yep.
But they're not capital mortgage funding, and they need to talk to us for sure, because we're going to set them in the right. We're going to give them the information that they need to know.
So, Tony, this hits close to home. I'm going to tell you why it hits close to home, because my daughter got married last summer, right? So they're young. So they're young. They've got their own ideas, their own thought process. So I had to sit down and start them from square one, and we had to develop a game plan for them. So I listened to what they had to say. Then I got out of dad mode, right? Got out of dad mode, and I went into mortgage guy mode. And I sat down with them, and I said, I want to hear what you guys are thinking. So how long do you think you're going to be in this house? How long, how much do you want to put down? What are you looking for? I had to know the ins and outs of their, I was lucky I had inside information. I know what they both do for a living. I know how much money they made. So I already had that inside information, but this is what your kids are going to need to do. And then you're going to want to sit down with somebody that's going to go through it from start to finish and go ahead and try to execute on their game plan to make them successful. And I think that's a real big thing. And if they get a third party, objective plan that they can go ahead and take a look at all the options, I think that's the best way to go.
It's exciting stuff.
All right, certainly.
Hey, Tony, it's a great.
Make sure they get the right information.
Exactly.
Yes. Yeah, we'll get them hooked up with Joe as well. He's an amazing, credible real estate agent, and he backs up. He has the knowledge. He has the database. He can analyze everything, and I think that would actually be a really good marriage there too.
Yeah, so Tony, what I've learned, Tony, is that like you and I are only the parents, okay? We don't know anything when it comes to our kids, but in our real lives we know a lot. But when it comes to our kids, we don't know anything. Well, how do you find that?
I don't. I have an excellent relationship with my children. They're both young adults, and they come to me and always have for questions on absolutely everything.
Well, so do I, but I'm just still the dad. I'm still the dad, no matter what.
I just don't have the right answers to, and I certainly don't have the money to give them to, say, here's a gift of, a hunk of money that you can put down on a house.
Well, good stuff, Tony.
My point is you just have to turn them over to somebody and hope that they get the proper coaching. That's all I'm saying.
There you go. 248-539-9797 if you want to sneak in a phone call. What I like really about Tony's phone call, she starts off with saying, I haven't done this in 20 years. Well, Joe, as we mentioned earlier in the show, things have changed quite a bit, even just in the last 10 years.
Absolutely. Things have changed in the last 5 years. Right? I mean, it's big time different, and it's really important. I mean, the way that we price a home is different compared to, you don't price it to negotiate down. You price it, if you're going to negotiate, you price it to negotiate up. So, I mean, that's a small but big difference right there. Very different market.
Yeah, just in the way you even go about negotiating the house. And then Becky touches on it. The knowledge is the king. We talk about it here so often. We're going to be going into our 20th year, I hope, next year here on the radio. And what we've always wanted to share is that knowledge that gives you that confidence. And if I said it 3 or 4 times today, I'm going to say it 10 times next Saturday. It's truly what makes up the difference. Beck, when I sit down with a lot of the families that are first-time home buyers, the ones that we meet with and we sit down, we put that plan together, way more enjoyable experience than families just at the last minute, they make an offer. There's not even a pre-approval out there.
Yeah.
And so often we see that where there's no plan.
Yeah, and it's everything. And like Harvey's saying, we are the kind of, you're going to talk to me, you're going to talk to Harvey, you're going to talk to Joe. We are available. So if you're someone that wants to just email all the time, we can email. If you want to text, you can text. But I appreciate someone that wants to come and sit down with me. It's, especially if you're a first-time home buyer, it's everything. You need to know what's going on because there's a lot of information. There's a lot of wrong information. And you need to know what is correct and what's not and what's going to be the best situation for you.
Fun stuff. There's a lot of great lenders around here and a lot of great agents around here. Joe, you got some final thoughts?
Yeah, just following up with Becky. I mean, at some point we need 30 to 60 minutes to be able to meet and talk. But other than that, call, text, email, it all works.
Oh, there you go. Good stuff, guys. Always great to have the great Joe Muckster in here. Joe Muck, Keller Williams. Find him out in Novi, Northville. Call Becky Yaley at Capital Mortgage Funding. She'll get you set up with all these top-notch real estate agents. Also, for Becky Yaley and Joe and for Harry, I'm Harvey Fruit.
I'm going to call Tony. She's got all the answers.
She's got all the answers.
Got all the answers.
Tons
She's
of
a good
sports.
mom.
Phenomenal.
We got
Tony's a
Back to
good mom.
Budo coming up
Great.
with sports. Keep it here on 97.1 The Ticket.